This is Craig Haugard with your Financial Issues Ag Update for October 13th. The monthly USDA supply and demand report was the main driver in yesterday's markets. Corn traders were expecting the report to show a national average yield that was a bit lower than the one posted in September. Instead, the USDA raised the national average yield by 0.2 of a bushel to 176.5 bushels per acre. This in turn pushed total production to 15,019 million bushels and led to a projected carryout of 1.5 billion bushels. At the close, the December futures were 10.5 cents lower as they settled at $5.22.5 per bushel. The USDA report seemed to administer the coup de grace to the soybean market. The national average yield is now projected to be 51.5 bushels per acre, and that was half a bushel more than the trade was expecting. This took total production to 4,448 million bushels and pushed the projected carryout to 320 million. That's up from a projected 185 million just 1 month ago. At the close, the November soybean futures were 30 cents lower as they finished at $11.9825 per bushel. Wheat saw their projected ending stocks drop to 580 million, which was down from the 615 million in last month's report, as well as being below the average trade estimate. We also saw the projected world ending stocks get slashed by 6 million metric tons to stand at a current projection of 277.2 million metric tons. At the close, Minneapolis December futures were 9.5 cents higher as they settled at $9.55. Kansas City was 5.25 cents higher, closing out the day at $7.3975 per bushel, and Chicago futures were 2.25 cents higher, closing at $7.34. Cotton posted their lowest close for the third consecutive session. The USDA report estimated cotton production at 18 million bales, which was a bit over 500,000 bales decrease from last month's projection. Projected ending stocks were also decreased by 500,000 to stand at 3.2 million bales. In spite of that, at the close we had December futures 341 points lower, settling at $106.38 per hundredweight, and in doing so, they put in a key reversal lower formation on the daily bar charts. Livestock futures were mixed. At the close, we had December live cattle 92.5 cents lower, ending the day at $129.25 per hundred. November feeder cattle were 7.5 cents higher, as they settled at $161.80 per hundred. Lean hog futures were softer for the day. At the close, the December lean hog futures were an even $2 lower, as they closed at $78.17.5 per hundredweight. Class 3 milk futures had an extremely narrow trading range for the day. It's interesting to note that the USDA recently noted that with the cooler fall temperatures, the cows are more comfortable. That's resulting in farm-level milk production increasing in many areas of the nation. At the close, we had the November futures 7 points lower as they settled at $18.74. Meat cutout values were lower straight across the board. Choice box beef ended the day a nickel lower, closing at $281.07. Select boxes were down $2.29 to settle at $261.35. Pork carcass cutout values ended the day down $5.63 as they settled at $102.38 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.